Out of the US today, the worst of all worlds on data. We had sharply slowing growth, inflation proving to be sticky. That's pushing out those Fed rate cut bets even more. Where do you see the dollar going? Where do you see the yen heading relative to that in this kind of environment? It just seems that it's going to be more of the same no matter what policymakers say.
Well, look, I think that the slowdown was a bit overstated. GDP is kind of a funny number. We all talk about it, but it's probably not the most reliable indication of where activity is. I'd say that the consistent payroll numbers that we've been getting probably tell us more about where the economy is. The inflation side, I think, is a problem. We think that it's going to come out at 2.8. If it does, year on year, March core PCE, if it's not 2.8, 2.9 is more likely than 2.7. So we could see some more pressure here. Ultimately, we think that there will be some convergence, and we still expect the Fed to cut twice this year. But I think the market's waiting for that convergence to be more visible on the radar screen rather than kind of hoping and praying.
Yeah, so you see two rate cuts. That's increasingly becoming a bit of an outlier position. But I'll tell you one position that's not so much of an outlier. If we look at Europe, the ECB, there seems to be a bit of consensus gathering around June as the month for easing. Is that your view? Do you see it ending there? And what's your outlook for the euro?
Well, we think that they are going to cut in June. We think that they're going to continue to cut through the year, and that we'll probably see differentials with the U.S. widen, and we expect the euro to go down to 104, 103, 104 by the end of the year, and that would be where it troughs out. I think ultimately the U.S. is going to catch up in terms of cutting, but I think the path is going to be slower and more delayed. So through this year, we see more downside risk to euro dollar than upside risk.
Just want to talk about something a little bit closer to home where I am. The Aussie dollar has popped above 65 cents US this week because we had a hotter than expected inflation print here as well. Inflation's coming down, but not at the pace that the RBA might have hoped. So do you see a bit of Aussie dollar strength in the future?
Yeah, look, if Aussie dollar and most currencies have traded on the back of central bank reaction functions. So I think that the CPI tells the market that RBA isn't going to cut again, and probably the next move could be that they're not going to cut anytime soon. Next move could be a hike. If you chart it out against CNH, the relationship isn't as tight as it used to be. It's much tighter with rates. So we actually like Aussie dollar on crosses, maybe not so much against USD, but against things like Swiss franc. We think it'll do well.